So Chris and I have just been chatting for a minute or two, but for everybody who doesn't know, this is Thousandaire FX. Chris Moore, is that how you pronounce your last name, Chris?
Yeah, more, yeah.
Yeah, Moya, perfect.
Right.
So he and I have been Twitter friends, Twitter pals for probably for almost 2 years now. So it's fun to see each other's faces here for the first time. And on top of that, we kind of were pinging each other this past weekend and came up with the idea of really wanting to expand on the process, right? And in terms of kind of how he and I both think about our process, and then also, ideally bringing in some other kind of quote unquote, Hedgeye Jedi's and how they kind of approach and take what Hedgeye provides them every day, every morning throughout the quarter, and applies that to their portfolio construction, portfolio trading, et cetera, et cetera. So today's session, right, Chris, is kind of, between you and I, we're going to kind of go back to the beginning, really, I guess, right, of sort of how we
Yeah,
found
yeah.
Hedgeye. What we've, I guess, learned, or, for me, it's been about 2 years. So I guess I'll start since I'm already rambling. So I actually found Keith on Twitter because he got in a spat, like Twitter beef with downtown Josh Brown. So I was kind of old wall, right, in terms of following a lot of those guys like Ritholtz Wealth Management, downtown Josh Brown, a lot of that crew. Joe. Joe's a contra stream. Joe on the contra stream that Keith mentions, right? So he worked for Bloomberg or works for Bloomberg. Anyway, that whole career, right? So that was they've now turned into my contra stream because it's just I can't believe I wasted so much time. I mean, I was reading Josh Brown's blog back when I was in MBA school, right, in like 2009, 10, and that kind of thing. So I've been following him for a long time. So I basically stumbled on the Keith the fall of 2019. And again, it was just during the spat, and I was like, "Who the hell is this Keith McCullough guy?" Right? And then I started following him, and I realized that he put out those morning tweets every day, kind of reviewing kind of what he's seeing globally on a macro level, and I was like, "Holy shit! Like this is fucking awesome!" Like I
Yeah.
can't believe he just puts this out there every day. So that started becoming my routine. I didn't really actually realize that he was a CEO or he was a co-founder of Hedgeye really until like 2020. So they had I guess I don't know why I didn't piece it all together. It's kind of stupidity on my behalf because I could have really had a much clearer picture into going into the drawdown that was March of 2020.
Yeah.
Luckily for me in that environment, I was actually just switched jobs. So I switched jobs in late January of 2020.
Yeah.
So I had actually, already put in the process to kind of like roll over my 401k here, like my retirement accounts here. So those were all basically sitting in cash for the most part, like in kind of February timeframe. It was kind of right before. So it was pure luck, absolute pure luck, pure luck. But in terms of Hedgeye, I got exposure to that when they started doing a couple of those free macro shows. I don't know if you
Yeah.
remember, but they did a couple of free macro shows in that time frame, kind of like February, March, when shit was hitting the fan. And then, one of them, they provided like basically a 30-day free trial to their, I think it was like the middle tier, which got you like macro show, early look, RTA, right? I think risk ranges as well. So
Yeah.
it was a really great, it was an unbelievable, I still can't believe they gave that out for 30 days free during that time frame. It was an absolute like gem. And so that's what got me hook, line, and sinker
It,
in terms
it's
of that.
it's
Yeah, go ahead.
amazing, but I can imagine in like 30 days it could be really daunting, right? There's a lot. That's a lot of.
It was and luckily my background it is in basically I was equity research associate for a while, and then on the institutional equity sales and trading desk for a couple different investment banks. And so I'm familiar with the space, right? I've kind of I'm very familiar with trading, with market movements. It's always been a passion of mine, Chris, in terms of just portfolio allocation, just basically the equity markets in general. So I think for me, I just was like, I can't believe this research is available to the retail investor, to be perfectly honest, because
Yeah.
to me, it just brought me back to my days on the institutional sales and trading desk, right? Where you're having analyst meetings every morning at 7:30. You're talking to, portfolio managers at various hedge funds across the world. I covered London for a long time, New York, et cetera. And so, you're getting this conversation, you're getting this like elite level of discussion and research and data. And so that to me, it was just like, I was just like, feed it to me as fast as you can. I was just absorbing it. I was just unbelievable. My wife, she's amazing and a huge proponent and sort of supporter of, this whole process. But she was just like, what are you doing every night? And I'm like, I've found this unbelievable like research team that's going to help us manage our portfolio and our retirement accounts and that kind of thing. So that's sort of how I discovered it. And then basically once the 30-day free trial, I went to her and I said, listen, sweetie, we I need to sign up for this. Like they're doing like a trial period, or sorry, they're doing kind of a promotion. And she's like, yeah, go right ahead. So that's when, basically call it, April, May of 2020 is when I really started, that's when I got my first subscription. And originally it was, I think I did kind of the one above the like base. So I got macro show, early look, risk ranges like RTA, I believe. And that was awesome. And then basically when they did the Black Friday promotions in basically, 4 months later or whatever, that's when I upgraded to kind of their platinum. The Macro Pro was always just kind of a little out of reach from a monetary standpoint, but so I've been basically kind of at the, and then, most recently, Hedgeye, I won that. Basically they gifted me a year of Macro Pro. So that's kind of, most recently, that's kind of what I have their full king caboodle right now this year. So that's kind of how I found them. And took me, I definitely blundered a number of things as I was learning. Again, it was obviously, you had market volatility, as you remember, in 2020. But we're
baptism of fire, right?
Yeah, I mean, it was quad 4 to quad 3 to like, maybe a quick quad 4, right? And we fucked up gold in September, and then it was kind of, obviously quad 2, and you're off to the races, and pretty much anybody can make money in quad 2. But that's when I really kind of, once we kind of goofed gold, and I understood that taking a loss was okay. In September, and Keith said this on the micro show today. It's like, he always considers, he knows there's a quad shift when he's losing money, right? He said, he mentioned it on Microsoft this morning. And that's when it kind of like, that was one of the things that really kind of clicked. And so that's when, so again, it was kind of off to the races. And, so my 2020, I was kind of basically flat, right? Because I was just like bad entries, too big, too soon, following the RTAs, like kind of, not really understanding that they're much more of a signal versus kind of like a directional. Again, I mean, he's getting exposure to them, but, from my days as like a trader, it's like, okay, if somebody's telling me to buy, I'll just keep harping on gold, right? GLD. It's like, I want to go own gold, right? I want to go buy, I want to go buy 4 or 5%, and I want to go do that now, versus like kind of incrementally getting yourself in. So, but that's kind of how I discovered it. We were speaking a couple of minutes ago, and you said that you're obviously Navy background, engineer background, and that kind of thing, and then you've been full-time trading since 2017.
So for me, I'm trying to think. It was, he hasn't been on it for a long time. I think it was Macro Voices, the podcast.
Okay.
Have you heard of that?
No.
So,
well, actually, no. You sent me one. You sent me one, so I have listened to them, but I don't listen to them frequently.
So I think he had a spot on Macro Voices right before, I think, 2017.
Okay.
Thanksgiving, I guess, Black Friday and everything. Yeah. So he was on there, done the whole spiel. I was like, oh my God, this doesn't sound anything like any of the other podcast guests, because it was all just numbers instead of story. I was like, what the hell?
Yeah. You're
just
like data.
Honestly, like listening to it, it just sounded different.
Yeah.
It was just, I was like, it made me stop what I was doing. This sounds like, but it made me stop what I was doing. Because I was like, stop, because I'm not understanding what he's saying. And I'm going to listen to it later when I can listen properly.
Yep.
But listening to it, I didn't take up the offer right away. Then I came kind of the middle of 2018, and I'm not going to lie. So I will freely admit I'm a revised gold bug.
Mm-hmm.
I reformed gold bug.
Yeah.
But I came in thinking that I was clever enough. I was like, hey, I'm just going to subscribe to like ETF Pro and figure out these quad things. And then I'll just, once I've figured it out, I can unsubscribe and just carry on. Just once I've figured the map out, I don't need them after that.
Yeah.
And I got called out no end of times on the macro show for stupid questions. And I have the first question. I was like, what? He can't talk to me like that. I'm paying for this. Why is he talking to me like this?
What an asshole, right? Yeah.
Yeah. And
too funny.
But yeah, it was just fun. So yeah, that was sort of 2018. And then I think I got I picked up the Platinum Pass that Thanksgiving. So for Black Friday, I picked it up then in 2018. And then as you've seen, like from my videos and stuff, so having an engineering background, I know Keith doesn't like the why, but I at least need to understand what the numbers mean for me.
Right, like some of the drivers.
So that's why I break down, and like the videos that I make are more just for me to try and put down what I've learned to see whether I know it or not.
Mm-hmm.
And for people to sort of say, I'm hoping that people will come back and say, oh no, you've got that wrong. You need to go and do this. And I'm like, right, okay, so to try and help in that way.
Mm-hmm.
But yeah, it's just been like going down, like listening to people. And I'm not saying that they're bad. They can be helpful, but listening to people like, Luke Groman, and I'm not saying they're bad, but it's just different, right?
Mm-hmm.
It's like, okay, some of the stuff might be correct, but there's no time into it. It's always in the distance of, oh, China's going to do this, and then they're going to take over. Therefore, you have to own gold. And I know I'm focusing on gold there, but you just have to spread your bets and just slowly kind of manage your portfolio so that you're in a position to take the benefit of these different things.
Yeah, absolutely.
It's
and
never all or nothing.
That was definitely one of the things that was a huge standout to me as well. Chris, is basically the quant, the data behind the decision making. So, in my prior role, and I think a lot of old quote unquote old wall guys or guys and girls that are late people, to be politically correct, people who might be watching this, they'll appreciate this because it's all storytelling, right? It's even from the analysts, they're, as an associate, research associate, you're running the numbers and you're modeling it, but your numbers still have basically narratives inside of them, right? It's like you think that the price of chicken feed and what have you is going to increase, and so you're like, all right, should it be a 2% increase or should it be a 5% increase? And there's no real driver behind that. And so you're talking to portfolio managers and stuff like that, and it's typically all just a story. It's a narrative versus this quantum mental, right? That combination of the fundamental analysis with the quant side of things that certainly like the Hedgeye analysts all bring to the table. To me, it's just like such a game changer, and you get such a huge edge on anybody else who's not applying that kind of thinking to to their process. And
it comes out in the notebook reviews as well, because there's kind of a natural progression I've noticed where sort of the first maybe 45 minutes, an hour is a lot of numbers.
Yeah.
And it's almost like you have to get that in, go over the numbers, go over the books, and get that out, not get it out of the way, because that's the important part. But once you've done that, it's almost like you can allow yourself to sort of say, what do you think about what the Fed said?
Right. Yeah.
Right.
Yeah.
Whereas most people just jump straight to that and then try and make decisions about excuse me, and then try and make decisions about what such and such a person said.
Yeah, and I sometimes get a little frustrated. Sometimes we'll get on some narrative tangents on certain episodes, and I, in my head, obviously I let people kind of finish their thoughts and stuff. But to me, it's like I don't need a narrative. Like, narratives literally play zero impact onto my decision making in terms of like the process. Like, it's risk ranges, it's trend lines, it's basically quad maps, right? In terms of like, where do I want to be? Like, what, again, today, this kind of fitting that we're doing it this morning, because Keith was very adamant about that on the macro show today, right? It was very much about, his early look, I literally wrote it down: sell anything that breaks trend. And it's like, it's hard to do. It's hard to do because you get kind of caught somewhat. You don't really get married, to stock, but like when something's been performing for you, and then all of a sudden it breaks trend, like, well, it'll come back, right? Like, but you really have to be diligent. And that's some of my, probably some of my bigger losses is because I wasn't diligent, or because oil is a great example. I got called out on Tuesday on Twitter for still being short oil. And it's like, I got bigger in the position to kind of trade around it because I'm also kind of a trader, right? So I could do that, but it's not the way that I would recommend it for anyone. And it broke trend, right? And Keith sent the signal, but like in my head, in my head, I'm like, no, like, oil's got to go down. Like, we're going into quad 4. It's like, it's overbought. It's, blah, blah, blah. And, again, that's like the narrative is going in here. But on paper, I'm seeing the numbers and I'm like, just get the fuck out of the position. Like, who the fuck cares, right? Like, you don't need to be right. Just make money, as Mike Taylor loves to say.
And I think, yeah. And I think with them, it's, the learning part of that is to try and make those points the exception rather than if you can get those down, if you can reduce those times where you're like, what am I doing? Like, I'm wrong. I just need to just fix it now. Just fix it, close it, get it on, and just like move on. Just get it done. But it's always interested me, and part of these conversations, I'm hoping that we can start talking to people, because no end of times, especially on the arena, when I was writing a lot more there, it was about when did you subscribe? Because talking about narratives, there'll be a narrative around Hedgeye's been getting stuff right for a long time. So if you subscribe like right at the peak of when we had those back-to-back quad 2s,
sure,
and you got run over, right? Because
like in June, July, right? Basically, if you subscribe, then
So like where Keith said, I know I need to change because I start to lose money, right? So if you come in right at that point, then for you it's like what's going on? This is all like, this is crap. And just the same say if if you subscribed maybe January or February of 2019, because you were like, oh, for the last 3 months, all I can hear is about how, Hedgeye knew, and Hedgeye was long bonds and everything. Right. All boring dollars, bonds, and they completely missed it and made a whole bunch of money. So if you sub then in January, you're like, what the hell's going on? And I've always talked about it like, especially with quad 4s, I've found. I've only really been here for 2 proper quad 4s, the 2018 and 2020.
2020, yeah.
But in all the panic, and I've wrote about this like a map, it's like in all the panic, especially in a quad 4, it's like you latch on to this quad map because it's like a safety, like these guys have got a plan. So people can get caught out, and you see it when people are writing on, especially on the arena and other places, and in questions in the macro show, it's like, I joined because you guys have this plan all laid out, but you're going off the plan. Like what, so it's like they have to kind of, they're kind of like a deer in the headlights. It's like, well, I came here because you have this laid out, structured plan of all these different quads and all these different things, and you're long here and you're short there. I like that, and now you're going off piste. And
right.
What do you mean you're not buying this thing? Because this
Yeah.
this A4 sheet says buy this thing,
That's
and
right.
you're not buying it. Why not?
Yeah. That happened, basically so when I joined, so like that quad 4 in 2020, right? He was like long tech, and everyone was like, well, tech's not on the map. Like, why the fuck are you long? Like, why the fuck are you long tech? And he's like, well, because it's fucking killing it, right? And it's like, like everybody's long Apple, Microsoft, and Google, whatever, right? Amazon. And so it's like, okay, but it's not on the map. And then even today, right, in the early look, he's like, I'm not buying bonds and TLT. Like TLT needs to be better. It needs better pricing. It needs to be better. But like on the map, it's bonds are what you want to own. And we talked about this on the notebook review last night as well, right? I mean, in terms of how are we positioning ourselves for the bond and the bond move, and we basically determined that cash is king, right? Bonds are great, but like there's a time to own them, and it's likely kind of leading into the quad 4, and then during some portions of the quad 4. But if you're getting a big sell-off, they're going to sell off too, right? I mean, they're still an exposure. So I think you're spot on. I mean, I got caught off. So basically, I as I mentioned, I sort of got the free sub and then subscribed, but I was still just learning so much that I actually didn't really deploy, right? I didn't really until probably May is when I made my first trade, in terms of like kind of with the Hedgeye process in mind. But to your point, I mean, like 3 weeks later, we then pivoted to quad 3. And I was like, well, no, but like we've been long gold for like I haven't been long gold, but like we've been long gold for like basically 2.5 months. So it's like, why am I getting rid of gold? And so that's again, these are just like little mistakes that I made, learning the process, and it's really it's certainly humbling, right? Because you're like you pivot, and sometimes you got to pivot quickly, and other times you can take your time. Like for instance today, I'm Keith's like sell tech, so like I'm selling some tech because I'm not getting the signal. Like Vixen is sort of still bouncing around the middle of the range, but like it's still making a lower high, and Keith just sent a thing on an RTA, basically I think it was, I forget which RTA was, but basically implying that stuff's bouncing to low, basically going to lower highs, right? So both Qs, small caps, like the whole, I think it was a short posh call. And so that now is in my head too. It's like, okay, well maybe we've had like 3 days of kind of like a tech bounce, like if this falls off, I'd much rather take a 5% profit here over the last week versus basically selling it flat in like 3 days.
I think at the same time, after a really good 2021, it could really knock people back. I'm not saying that's the decision process, because it's not, but it could really knock people back after having a really good 2021 to then go like flying straight into a big loss in January. And that's where the the psychological part starts to come in, is
for sure.
Once, and I've talked about it before, like with some of these calls, like a perfect example was natural gas in June.
Yes.
Because once it was signaled, and once it went out, I think it was in one of the macro themes decks. Like it didn't give you a chance. It just it was just relentless. It was just relentless. So the very first, and I was writing about it, the first day it had a little pullback of like 1 or 2%. And people just piled into it. And then it spent the next like 10 days just going down and down and down. And that's the psychological part. So if you screw up,
it was like, I think that was August, right? It literally just went up. It was August, and then there was about a week. Basically, it was almost the entire month of August. It went from UNG. I got it pulled up on the map. It went from like, call it 1450 down to like 13 or 12. High 12s, right? But then it ripped to 22, right? And with the rest of the oil and energy. But it's so hard. I mean, that's the part that's like so hard in terms of like, this is where you want to get, you want to allocate towards natty gas in that move, but you're also kind of trained to, don't chase, right? And wait, be patient, because I think that's one of the biggest things from a process standpoint, which I still am working on, both both personally with children, but also in asset allocations and everyone too, is patience, right? And being patient and not chasing. And Gavin had a great point last night on the Notebook Review in terms of like, I'm okay. Like, I'm not seeing anything that's a clear cut signal. And you're in the same boat, right? I mean, you crushed 2021, right? You killed crypto and really you dominated. And so now you're sitting here and you're like, all right, we're the 13th. It's fine. I haven't been in, I believe, again, I don't want to speak for you, but I believe you've been kind of in cash for the last like month and a half or so. And
that's it. It was funny when one of the guys, I think it was Gavin, but I'm not sure, said I'm like 50% cash. And I'm sitting there silently. I'm sitting there quietly. I'm like, I'm in 100% cash.
Exactly. Yeah. But sometimes that's the move, right? And that's, Keith said it this morning. Again, I don't want to keep parroting Keith, but he was like, when confused, raise cash. I like wrote this down in my notebook. It's literally right here, right? When confused. Oh, I don't know if you can see that shit. I'll have to, but it's right there. It's a little blurry, but it's right there. When confused, here, I'll take my background off so people don't think I'm full of shit. Here you go. You can see my awesome wallpaper here. There you go. It says, when confused, raise cash in my scribblish. There you go. But yeah, no, I mean, it's really important. It's really important to have patience, right? And to just wait for your spot. And whether it's, whether you go short, right? If you start shorting stuff, as we get kind of near the end of kind of January or going into February, again, it just depends on when the market's going to pull forward this quad 4.
Yeah. And like, that's why I started using the charts that I use. So those drawdowns from 1 month highs, because when I talk about them on a video, I kind of call them decision points. And it's like using natural gas as the example. If you take that first down day as you're like, right, I need to get in because I'm going to miss it. And it's like, if you're looking at enough things in the right area, there'll always be something. Keith says it a lot. There'll always be something that's down.
Yep.
And it doesn't mean you need to go max size in it, even if it's just, like 50 basis points add into a long here and pruning 50 basis points over here. It's like there'll always be something. And I use those kind of drawdown style charts to say, okay, the numbers don't even matter because it's just a drawdown from a 1 month high. So it's like the price doesn't matter. So it's like, right.
I'm still trying to wrap my head around. I mean, you told me a couple of months ago that you don't even look at price charts. You literally don't even know the price. The price of and you're just like, yep. I mean, you go by your kind of your strategy there, your bands, and I think we'll definitely spend maybe next next session or session after that, what have you. But I definitely want to dive into that because I think it's really, really one, interesting, and two, different than what I'm not like a technical, technical analyst or technical analysis, but the pricing definitely impacts like where, the charts impact where I'm trying to get entry points versus,
it's really funny though, because then you start to notice that these kind of levels, and I'm not like, just to clarify, I'm not trained in any of this. I'm just right. This is just all my own stuff. It doesn't mean it works for me. It doesn't mean it's the thing that everyone should use.
Well, and that's a great statement, Chris, because every Jedi I speak to, right? Anybody from Leslie to Gavin to X2 to other side to Caffeine Addict, right? To yourself, right? To everybody. Again, I'm just naming a few. Fracticat, another great example, right? I mean, everybody uses the signals and the tools, and basically have adapted them to their own way of deploying them. And I think that's what's so interesting about the Hedgeye way, is that it gives you such flexibility, to ingest the data, but then deploy it and whatever makes sense for you, right? And it's really cool.
And I think I need to make sure I get it right so I don't screw it up. But
no.
any kind, like I always think that in any kind of trade, when you see something, it's like I always like constantly saying, and I know it's repeating Keith, but it's never one thing.
Mm-hmm.
It's like why I've always like I annoy no end of people on the arena by saying like that's just one number,
Yeah.
but two different things make up that number, and if you move them in two different directions, you can get the same number.
Yep.
But
Yep.
but from completely polar opposites. And in the same way of that is like a trade. You need to do everything. You need to be, on my charts that I use, when something's down 5% from a 1 month high, and you can see in the past it's bounced at that 5%. It doesn't mean it's going to go straight back up to a new high, but it's a decision point. Okay. So you kind of need to have that mean reversion part of like, right, I think in the past it's mean reverted from this point.
Yep.
But then when you're in the trade, you kind of need to be a trend follower. It's like, right, I don't want to touch it because the trend is strong and just leave it alone.
Mm-hmm.
And then as it gets to the top end of a risk, and then the risk ranges, it's like, right, okay, now I need to get into portfolio rebalancing. And instead of it being annually, you're thinking daily, because it's like, right, it's at the top end of the range. So I'll take 25 basis points off.
Yeah, right. 50 basis points. Yep.
And doing whatever it is that you're doing. So in that, there's mean reversion, there's trend following, there's the quads of which asset you're in, there's the risk ranges of just like obviously the Keith's signal.
Yep.
That's all that. There's all those things. So if all of us can share what we're doing, because at any one time I might be completely wrong, but if you or Gavin or this is leaving out Keith because obviously he's doing all of this stuff, but I'm saying like if I'm like being
he's got the keys of the kingdom,
the other guys might be doing things and you're like, okay, because it's constantly it's constantly shifting. And when
absolutely
people get in trouble, I think because they focus on one thing because it's easier to learn and it's easier to understand it. But that one, you might cotton on a bit like, when did you subscribe? Like coming into the tail end of a quad 2 or come at a quad 4, you have a different view of things, right? So just the same, if you come in learning this one thing, which works brilliantly for a year, and then it doesn't work again for like 2 or 3 years, like a style of trading or a certain signal or a certain indicator, all these 3 indicators always work. And they do for a year. And you're like, yeah, I've got it. I get it. And then they might not work again for forever. I don't know. Keith always talks about the machine, like the machine might change, or someone comes along and codes some new thing and they never work again.
100%.
So you need to not just looking at all the different things as in assets, but you need to have in your head that you need to have all the different styles of trading in your back pocket, or at least not understand them, but at least know that they're there.
And correct. 100%. And I think that's a potentially great way to end, but I'll say this is that I'm sure you're the same way, right? I mean, or probably similar to some degree, is I've got key things that I'm looking at basically all the time throughout the day, right? I've got watch lists inside of my brokerage account at Schwab. I've got Koifin, right, that I use for their market dashboards. I've got TradingView that I have some other components to, certainly from a chart standpoint, right? I mean, guys like Fracticat have kind of published stuff on there that I've leveraged. And so those all basically are dynamically intertwined into decision-making process. And to your point, there's never one thing. And I think that's the biggest takeaway, if anybody, from this first session, is that it's never one thing. And hopefully, as we kind of do more episodes here, we'll start to learn about how other folks incorporate their dynamic components of making that decision. So that's awesome.